Welcome to another episode of Financial Freedom with Tom Hegna, where I introduce to you some of the top financial professionals from around the country, and I'm talking Main Street, not Wall Street. I'm excited about our next guest. It's Lane Martinsen. He's the author of 5W Retirement Blueprint. He's the CEO of that company. He's in the Phoenix, Arizona area, so welcome, Lane, to the show.
Thank you, Tom.
I think you're also the host of a popular YouTube channel, Financial Fast Lane.
Yeah, the company is actually Martinsen Wealth Management. And then we have this YouTube channel that's kind of surprised us with the popularity, and it's been a lot of fun to do that.
Now, I know a little bit about you, but tell the audience a little bit about your background. How did you get in the business?
It goes all the way back to 1988. I was actually recruited by a financial firm out of college. I got excited about it, and they provided an opportunity and some training. And so I took it and did that. I learned a lot. I'll tell you, so much has changed, right, since that time. Financial advice that was really considered good back then is not good given today, just because so much has changed.
Very good. So, you know, a lot of people have financial concerns, and you've come up with this 5W Retirement Blueprint. What's kind of the core philosophy behind that on how it helps people simplify their lives?
It's really about retirement income planning. And so when you have someone who's been working their whole career and they're getting close to retirement age, they have a lot of decisions to make. And it's pretty complex, right? And they're not thinking about this stuff and doing it because they're working on whatever career they have. And so they're going to be making some important decisions. So the book is really ideal for folks in that situation, where it's going to give them an overall view of the industry, the different biases, the different problems, what are the potential solutions. And so it really prepares people to actually meet with a financial advisor and to start to be able to ask some good questions and to get a good plan together.
Now, in here, you talk about advisor gamma. You know, I've heard alpha, beta. What is advisor gamma?
Yeah, so advisor alpha comes from a Vanguard study done, this, very well known. And it was basically they sampled people who have a financial advisor, and then they compared it against those who don't. And they were able to quantify that there was a 3% rate of return advantage for those who had an advisor. So that was an important study for Vanguard. But it only looked at rate of return, right, on a portfolio. So it was actually the Morningstar academics that did a study. It's called Alpha, Beta, and now Gamma. So Gamma is the word Morningstar gave it. And they're basically saying, well, when it comes to income planning, what is the impact of taking into account some of the other financial decisions, such as taxes, such as withdrawal rates, such as Social Security or total wealth? There's these multiple things, and they only used 5 when there's really a lot of different decisions that need to be made. Annuities was one of the ones that they included in a retirement income plan. And so they said, well, how much more income can we actually realize with a good plan? And can we quantify that? And so that's what the study did, and they showed that you could have 22.6% more income in retirement by coordinating and strategically planning out, the various elements of your financial life.
When it comes to living a long life, this longevity, we talk about longevity risk, but I mean, everybody wants to live a long life, but living a long life comes with challenges. How do you help your clients manage that longevity risk?
Well, we want to make sure the money doesn't run out, right? That's the main thing. And so if we use traditional rules of thumb, there's a significant amount of risk and uncertainty. You don't want to be in your retirement years with a whole lot of fear or uncertainty of what may or may not happen. And so in the book, we talk about the different types of financial tools. And there's a wide range. And so I categorize them into 2 main camps. We call them red tools, which are anything that has, you are at risk in the market, whether it's investments, real estate, etc. Or green tools, which come with certain guarantees, typically offered by insurance companies. And we talk about the pros and cons of each. It's the most non-biased book I think you'll ever read, because both sides have strengths, both sides have weaknesses. And it's really going to be the combination and the right balance that's going to make it more stable.
you use things like private equity or hedge fund type things. I think you're mentioning in the book. Kind of explain some of those options.
We see a lot of portfolios come across our desk, and we do an analysis. Most people have a lot more risk than they think they have, because even though they may have what's considered a diversified portfolio of stocks and bonds, they're really highly correlated, right? And so it's just not good enough. And so when you get into private equity, the average American really hasn't had access to private equity. It's usually large hedge funds or large institutions. But nowadays that's changed, and there's access, and private equity acts so different because it doesn't respond to the headline news, right? You don't get the volatility. Well, then the problem has been liquidity. Well, how do we invest in that and still maintain liquidity? And now there are these interval funds where liquidity is essentially quarterly most of the time. And so we can still have a high level of liquidity. We can actually participate in a lot of other companies. So if you look at the companies that have $100 million of revenue or more just in the United States, only 25% of those are publicly traded, right? 75% are privately held. And companies are remaining private longer. And so because they have access to capital and private capital, they don't need to go public quite as quick. But now we can actually invest in some of these really strong companies who are on growth, they haven't had their public offering, and we can own them right in a portfolio. It really stabilizes a portfolio.
Now, you have that YouTube channel, Financial Fastlane, and you've done a lot of videos. I mean, they've been watched by millions of people on Social Security and how you use Social Security strategically in planning for retirement. Kind of go over some of that.
Yeah, Social Security is a very important part of any retirement plan. It's kind of a foundational piece, and it's surprisingly complex. It's a government program. It's been changed over the years, and so most Americans they get to getting close to retirement, and they look at it. They really don't know what's the best. You get a lot of opinions, but should we wait? Should we wait till full retirement age? Should we delay? Should we start early? What about opportunity costs? And it's not a simple answer. It's not the same for everyone. It's different for everyone. Depends on your assets. Depends on when are you going to be working, retiring early? There's so many things that come into play, and there are times, when our advice is, in your situation, start early. In your situation, it's more like 65. In another situation, it's got to be 70 in your case. And it's when you're looking at the whole picture that really makes a big difference, yeah.
Now, taxes, that's always the huge hit. I mean, it's probably the number one thing seniors are going to be paying in retirement more than anything else, probably even more than healthcare is going to be pay taxes. So how do you help them manage and mitigate those taxes?
Yeah, we call it proactive tax planning, which is not typical, right? Most tax planning is done looking at the current year. What can we do to save some taxes this year? Proactive tax planning is saying, okay, we've got all these years of retirement. A lot of people are very, tax inefficient. And if they just accept the default, they're going to be paying way more than they need to. And so proactive tax planning really makes a very quantifiable, measurable difference. And it's going to make their money last longer. So it's a combination of things, right? There's multiple strategies. Roth conversions play a big role. They got to be done carefully. There's some insurance, tax advantages. It just depends on their situation, what type of assets. Are we talking capital gains? Are we talking tax deferred? But there is a sweet spot, and you can save yourself a lot of money with good planning.
So Lane, there's a lot of financial professionals out there. Why should somebody come and work with you?
Well, we're comprehensive. We are looking at all the pieces. We're looking at real estate strategies, tax strategies, investment strategies. We're not the traditional firm, and I won't say names, but there's a lot of firms. They've been around for a very long time. And a lot of times when people are unsure, they think, well, this is a big name. That must be good. Let's use them. But what they don't know is they're kind of going back in time with, they're kind of stuck. They kind of do things in a very narrow scope. You really want someone to look at your whole thing. Let's make sure you're not forgetting something, all the things around estate planning. the health care that comes into play, as well as the taxes, investment, and the income. So, we offer a free consultation, and we can discuss details. We don't charge people to have a conversation with us. We actually have a Social Security analysis report that some people buy on our website. It's like $29. They get a comprehensive, detailed report. We've got a lot of resources. We actually have an online course right on our website that people can enroll. It's our college course that's, it's about 6 hours of material, but they get a workbook, and we go through all these things. We have a lot of resources, and we're looking for people that are looking for us, honestly. And, we've been blessed. We have a wonderful clientele. I've got a great team of financial professionals, financial planners on my team, and we love what we do. It's helping people with all these difficult decisions that they've got to make. We want to help them make sure they're getting it right, because it's big decisions, big decisions that are going to impact you over the next several decades.
So, Lane, if somebody wants to get a hold of you, how can they get a hold of you?
480-550-6556 is our phone number. Our website is martinsenwealth.com. We also have financialfastlane.com, which is more of our online educational stuff. But yeah, that's how you do it.
So thank you very much for joining me today, and thank everybody for watching another episode of Financial Freedom with Tom Hegna.